investing in biodiversity is such an interesting topic to me because it does kind of go a layer down from these broad discussions that we've been having. And I think it kind of marries these two worlds. You know, I was the kind of kid that went down to my childhood basement and pored over National Geographic's 30-year-old issues. And today, I sometimes live in a cold world of economic data and investing, which we'll talk about today. So part of what we're trying to do here is marry those two worlds and talk about, importantly, why it matters. So I just want to, coming from the economy world of reporting, I want to start out with a stat. Investing to protect biodiversity in Southeast Asia alone could mean more than $2.19 trillion in benefits a year, according to the Academy of Sciences Malaysia. So just to sort of start to frame the discussion, I don't want to get too bogged down in definitions, and we had a whole great panel on taxonomies earlier this morning, but if we could just start by sort of framing what we're going to talk about today. What do we talk about when we talk about biodiversity? And specifically for Anderson, in the corporate world, making that case has become a bit complicated, right? And so I want to hear from you. What do all these definitions swirling around mean for trying to define success in one kind of collective way? So maybe you can start and then we can
Sure. Michelle, thank you again, and good morning, everyone. Biodiversity is a very interesting topic because in the environmental side, everyone's talking about carbon, but people forget that carbon is something that you cannot see. Biodiversity, you can, right? And a big part of carbon is biodiversity. There are ecosystem services that is provided through biodiversity. So I'm a little bit earlier on in this sustainability space in 2015 in COP21 in Paris, actually. Our company, which is a plantation but manufacturing also company, we committed 1-for-1. So 1 hectare of conservation and restoration for every hectare of plantation we have. So in this 7-year journey, we've invested over $100 million, and we have about 400,000 hectares of conservation and restoration. Just to put that into perspective, it's about 6 times the size of Singapore. And we never started this project as a carbon project. We actually genuinely focused on the biodiversity element. But now it has paid off. In the last 2 years, the carbon market has really picked up and able to put $1 on a standing forest, right? So this is very, very interesting. And it went through a verified carbon unit audit with Verra standards. And last year, it was actually issued in the Verra online platform. It's the largest carbon project in the world right now. 350 million tons of avoided emissions and about 6.7 million tons of avoided emissions annually, total 350 million. So I think biodiversity as a topic will be intertwined with carbon, and it has a huge role to play because we need to protect what we can see and what we can feel so that we can appreciate the carbon.
It's easier to kind of conceptualize sometimes than carbon in some ways. Laura and Kelvin, how do you see this conversation framed?
Yes, and from the financial industry perspective, he already mentioned that what we get from nature is ecosystem services, right? And those are really underpinning all the support for our economic activities and our life on Earth, essentially. So it's estimated that actually half of global GDP depends on these natural services that we get from biodiversity. And that figure is actually higher here in Asia Pacific. 2/3 of the regional GDP strongly depend on these natural services that we get from ecosystems. And the challenge that we see is a strong decline on the quality of these ecosystem services and also erosion of the amount of species that we have on Earth. And that's certainly worrisome. And in fact, tomorrow is already Earth Overshoot Day for 2022. That means that from tomorrow onwards, we're indebted to nature. We're using more resources than what nature can actually regenerate within a year. So that's very fundamental also for the financial industry to understand that we need to take into account the actual value of nature and integrate that in the way that we value the investee companies that we want to include in our portfolios and also in the way that we allocate capital.
Hey, Kelvin?
Yeah, that's a great summary. Not too much to add. I would say maybe 2 things. One is that a graphic maybe helps. If you imagine a wedding cake where the economy wholly exists within society and society wholly exists within the biosphere. Right? This is a UN graph. That really shows, we're really dependent on biodiversity for our survival. So it's not just nice to have. And then the second thing is, if you were to sum up the crisis in a sentence, it is that for too long, we collectively have put a zero price on nature, despite the positive ecosystem services. Sometimes even a negative price. We've subsidized the destruction of nature. And so that has to stop.
Yeah, well, no, I appreciate the examples especially, and also kind of your framing of the dependence that we have, and also in economic terms. So we'll move kind of into the investing bit, but I do want to kind of branch off from this just a little for 1 second on the links to climate change. I mean, we talk about biodiversity and climate change having some sort of relationship here. I want to particularly ask about this because we heard recently Singapore Ambassador at Large, Tommy Koh, talking about how, because we're missing the program on biodiversity, we're not able to do as much as we should on climate change. What are your thoughts on that? I mean, how do you kind of link these two broad issues?
Well, I think you cannot solve one without taking the other into account, essentially. So climate change is one of the main drivers of biodiversity loss. And at the same time, nature is really our greatest ally to combat climate change. So it's estimated that 30% of the climate mitigation potential will come from nature globally. Just to give you an example, since pre-industrial levels, half of all the carbon that we emitted into the atmosphere has been captured by natural sinks like forests, oceans, and other ecosystems. So it's really important to understand that we need to actively work to protect ecosystems, to regenerate those that have been degraded, and also allocate capital in a way that we are supporting those companies that are working towards that end goal.
Yeah, I think the key question here really is, what are the solutions which can simultaneously address both crises together? And the answer, in short, is nature-based climate solutions. The protection and restoration of important natural habitats, but also the management of working agricultural lands, where we get to work with nature rather than against nature. Maybe two things I'll highlight. One is that in terms of climate finance, only 2% so far goes to nature-based solutions. So that's very low, and we need that to increase. And that's because we need a more enabling environment. We also need better science, better understanding. For example, in seagrass now, we're using biomass as a proxy for how much carbon is sequestered, but that's actually not true. A better indicator is chlorophyll, because if the seagrass is brown, it might be emitting carbon. So understanding the science better is very important, and so that's what we're working on. But last point is, it's already a lot better than a decade or two ago, where conservation was entirely a philanthropic endeavor. But now we have financially sustainable models where we can start conservation, and so it's changing in the right direction.
2% is better than zero, right?
I want to build on Kevin's point, which is absolutely, mind-boggling. When I was in COP21 in Paris, 2015, I was speaking about biodiversity. There was literally 30 people, all practitioners. Not a single finance or from other industries, right? And now, 2022, 7 years later, biodiversity is being spoken in this Bloomberg conference. So that shows the importance of biodiversity. Second, the breakthrough of paying for standing forests. To me, that is a huge breakthrough, because this verified carbon unit concept, which is the voluntary carbon market, allows you to put $1 on carbon that is actually standing. And this is a very, very, very powerful concept, because if you just take a step back, all the corporates in the world right now are committing to net zero emissions, including Singapore. Not zero emissions, but net zero emissions. So what does that really mean? It means that you have to offset. Of course, you have to reduce first and then offset. So this carbon market that is really evolving very quickly, I think is one of the largest breakthrough to actually protecting biodiversity. Of course, then you have to say, how do you ensure that the carbon market has integrity? How do you ensure the carbon market is traceable? And how do you then make sure that the carbon market actually really protects the forest? So I think nature-based climate solutions, actually our company, we're working closely with NUS, Nature-Based Climate Solutions Center, with Prof. Koh Lian Ping, the Singapore government as well, to actually build a digital twin. So what we're trying to say is, to track the standing forest right now, it takes auditors to go into the ground and actually spend months to actually check whether the biodiversity is still there. But now using Landsat images, you're able to build a digital twin of the forest online, and you can open up this platform for funders and other investors to actually have access to. So really using technology building on the carbon market, and at the heart of it is really protecting the forest to stay as what it is at this point in time.
So you neatly kind of brought those two worlds together, and I think all three of you have made the strong economic and human case for why we get involved in biodiversity. So I want to talk a little bit more about the investor side. I mean, investors aren't all bleeding heart environmentalists. I mean, what is the case that you make? What is the case that you see for the bottom line for investing in biodiversity, helping financial portfolios? What are those channels where you see that most obvious? Maybe Laura, you can start with that.
Yeah, so essentially the way that we look at it is that companies are exposed to nature-related risks, and I believe Anderson will be able to sort of elaborate on that later on. But there are two main channels in which they are exposed to these risks. So on one hand, through exposure of physical risks. So basically companies depending on these ecosystem services to be able to operate. So let's think about a palm oil producer. They need good quality of the soil, low level of land degradation, availability of water to irrigate the crops. So fundamental service that we get from nature, right? So that's one angle. And then the other one is more on the transition risks. So that's more looking at how companies are actually impacting the key drivers of biodiversity loss. So for example, land use change is one of the key issues in eroding terrestrial ecosystems. So companies in the agricultural sector will really have to take into account how they are managing the risks around exposure to deforestation across their supply chain to make sure that they don't face issues in selling their products in countries where they are implementing restrictions in importing commodities linked to deforestation. So those are the ways that we look at it. And what we've done at Robeco is actually consolidate an internal biodiversity task force, and we have 2 biodiversity specialists working full-time on this, really trying to outline how can we integrate these nature-related risks in the way that we evaluate companies. So the first step that we took already last year was to do a sector-level analysis and understand which sectors we have the highest exposure to and have those clear impact on biodiversity loss drivers. And we found out that 30% of our assets under management are actually linked to sectors highly impacting the drivers of biodiversity loss, mainly land use change. So you can think of agricultural, forestry, but also apparel, for instance, and they're dependent on natural fibers for the production. So that was just a step to get that sort of heat map and understand where are the key risks across our portfolios. And now what we're working on is actually developing a framework to really understand and better capture at the company level how can we take into account all these nature-related risks in the way that we assess the sustainability performance of those companies in our portfolios.
So a lot of it too is about the risk side. A lot of what you've outlined is more kind of defensive in terms of mitigating, legislation, maybe regulation that's coming down the line. Okay. Kelvin or Anderson?
Yeah, as an impact investor, we look at more perhaps the opportunities related to this. In terms of the risks, Task Force for Nature-Based Financial Disclosures, TNFD, that's very important. Just a few comments. It's voluntary. We would like to see it go mandatory in the future. That would be great. And also, it needs to be sped up a bit.
Maybe I chime in a little bit from the biodiversity topic wasn't a large one in the last few years. It was very driven by carbon and climate and reduction of emissions. But last year, we issued quite a large sustainability linked loan, one of the largest in Singapore, $1.65 billion last year. And we actually tied a few KPIs specifically on biodiversity. Actually, it was 2 KPIs. One is 0% of biodiversity loss. And if there's any loss, we have to restore or conserve it back. And second is additional conservation gains, actually. So when we first introduced this KPI to the syndicate loan banks, actually they were actually surprised, because most of the KPIs within companies are actually focused on emissions reductions and on the social side. So again, it's really putting money in the game. If we miss that KPI, it's 5 bips. It is money, right? So in the end, is how do you share that risk with companies? How do you align interest? People think sustainability-linked loan is just a loan. Actually, it was incredible as a corporate because it aligned our whole organization. The banking team, the operational team, the sustainability team, the finance team actually had to sit down together for days, try to figure out some of these KPIs. Because previously, in a voluntary commitment situation, you have the sustainability and the CEOs making decision. But if it's KPI linked to actually real numbers, everyone gets aligned. So I think bankers and financiers, I think small little things makes a huge difference for companies. I think most loans in this region should be SLL eventually. And I think managing risk is about aligning interests. So if there's that biodiversity loss for the companies, the company must take action on the ground. And I think that's really, I think, coming from the company side, it's very important for us to actually be able to act on the ground and make a difference.
I want to follow up on that just from the corporate perspective, because you've kind of addressed, Anderson, a lot of the investment side of things and where they're putting their money. If you think about it from the millennial generation perspective, I mean, we hear a lot about how millennials are putting their spending toward companies and other goods and services that share their values.
Yeah.
I mean, do you see this playing out as one of the main corporate motives to kind of respond to that generation's needs, or are there other motives that you see, and particularly on biodiversity, where companies are feeling the need to get involved?
So 3 points on that. I think first, why the millennial generation cares, because they're young. And if climate change is going to happen, it's going to happen maybe 30, 40 years down the road. And we're going to bear the brunt of the climate change, right? So that's first. Second is actually a very crowded space, truth be told. Yeah? There are a lot of products that are being sold in the market, really using sustainability advertisements or marketing tools. But if you dig deeper, actually a lot of it's the packaging side. I mean, the inside is actually still fundamentally having a lot of issues. So there's a lot of noise. And I realized that the next generation now, like my generation, 30-something, we have to ask a lot of questions. And actually, I get a little bit cynical with a lot of the sustainability products, right? Last but not least, actually, it's sustainability should not only be for the elites. Sustainability should not only be for the developed countries, right? I'm Indonesian. I grew up in Indonesia. I spent some time in Singapore as well. But our goal is to really make sustainability widespread, accessible to everyone, and that's how you move the needle. So at least as a young person, I hope that sustainability is accessible to all, and that requires structural changes.
Laura and Kelvin, do you have any thoughts on what the motives you see from the company side in terms of getting involved in biodiversity?
Want to go first?
No, I think absolutely Anderson highlighted very good points here, right? We really have to dig deep as investors to make sure that it is not greenwashing, that they have the right incentives deep down. So.
Yeah, and what we've seen through our stewardship work with our investee companies talking about the importance of biodiversity for their bottom line and for their businesses is that they're starting to understand how they are being exposed to these nature-related risks, but to some extent, they don't really see the market push yet happening. So for example, we've been doing quite some engagement with soy producers and soy traders, and they still see that buyers are not asking for deforestation-free soy yet, not at large volumes. So there is a challenge there on how do you align the interest of all stakeholders to really make sure that you can move the needle. And I think there is certainly at the moment, like increasing awareness about the importance of, working around biodiversity laws and taking that into account in the way that we build our business strategies or investment strategies as well. But there is still more work to be done, right? And that's why we're here today, to sort of raise awareness and make sure that, everyone in their different roles from a stakeholder perspective, in public policy, government, companies or investors, they really take their ownership as well on how to solve this issue.
You get that holistic approach you're talking about. Yeah, I want to go back to something Anderson said earlier about, well, we were talking about marrying these two worlds of people on the ground and those investors. And I want to focus, Kelvin, I mean, we're talking about all these different types of stakeholders. We haven't talked about so much the NGOs, the people on the ground who are living and breathing this, as Anderson said, this is what you can touch and feel is biodiversity. So I want to hear from your perspective. I mean, what are some concrete ways that you can connect those folks who are living and breathing these biodiversity issues and challenges every day to the investors, to the companies, to the corporates, to the folks that are maybe sitting behind their computers most of the day and not seeing firsthand what's happening out there in the real world?
Yeah, that's a great question, Michelle. I think really the key question, because local communities have to be at the heart of the solutions here. You know, ultimately, we heard from earlier panels, the distinction between E and ESG is all one problem here. Really, it's a big socio-economic problem, right? If we look at indigenous people, they make up 5% of the world's population, but managed land that has more than 80% of the world's biodiversity, right? So they are the stewards of our natural capital, and they're also the ones who suffer the most in ecosystem collapse. So at the moment, quite a few communities are trapped in a negative spiral where poverty or desperation leads to environmental loss, overfishing, illegal logging, which leads to more poverty. And so how do we help stop that spiral is the question. And this is where, you know, Anderson talks a lot about carbon. This is a big angle, carbon markets. And the second thing is regenerative models. So first on carbon, it's very important that besides the usual, you know, conditions of additionality, permanence, no leakage, that local communities benefit the most from carbon projects, more than 50%, we think. And also that they're involved in the decision-making right from the onset, from the pre-development phase, that they have sufficient management rights, property rights. Many studies, you know, decades of conservation work have proven that this is not only the most equitable way, but also the most efficient way to do conservation, right? If I give an example, a 10-year study in a bird's head seascape in Indonesia showed that fish biomass in marine protected areas that are well managed by local communities are significantly higher than ones which are not, right? And also communities get to keep the upside. So that's, I think, very important for carbon. The second thing is regenerative models, where now we can stop the negative spiral with a body of work from all around the world, with lots of scientific research. We now have techniques where we can regenerate the earth rather than degrade it, whilst we bring about economic growth, right? So I'm talking about things like regenerative agriculture, where we prioritize soil health, maybe agroforestry in Asia, in Nepal, India. Can we bring that, say, to Indonesia, right? Where, you know, 40% of palm is owned by smallholder farmers. Can we have perhaps a multi-strata system where you have palm trees and underneath you have coffee, cocoa, jackfruits, and so on, right? Where you have a lot of social benefits from improved incomes, but also environmental benefits. I'm talking about things like seaweed, for example, where we can farm that offshore in a blue desert where there was no life before and you can bring life there. And many other solutions which are more nascent, so for example, using mangroves as a keystone species, regenerating the desert and then having shrimp and fish production from that. So all of these solutions are key to us. I think it's our job as impact investors to fund the viable models, because a lot of them are still very nascent. And at the moment, they're not ready for institutional investors. So ultimately, impact investors have to lead the way and then hopefully make these scalable solutions, because that's a big problem, right? A lack of bankable projects to invest in. It's not a lack of will, it's not a lack of financial capital, but a lack of investable projects. So it's about bringing about those projects.
Well, it certainly helps to hear that detail and those specific examples. I'm sure that's the case that you have to make even for the impact investors, is specific projects and successful case studies that can help them kind of visualize where their money's going and how it can make the most impact. We don't have a whole lot of time, and I'm seeing this menacing countdown clock here, but I do want to ask, first, you know, what are each of your biggest fears on this issue? I mean, is it just political intransigence, that we know what we need to do, but we're not doing it? Or are there other things that just worry you about how we're tackling biodiversity and investment?
Yeah, if I can kick off, I think the biggest challenge that we face is that we don't have a global goal for nature, right? And we've seen that with the topic of climate change, when the Paris Agreement was consolidated, there was a clear metric and end goal. We want to achieve net zero by 2050. And now, you know, all the different stakeholders are sort of figuring out how to get there by 2050. But at the moment, we don't have that goal for nature. And that's why all eyes are on COP15, happening in December in Canada, where global leaders will come together and we'll really talk about putting together a framework on what type of biodiversity goals we need to achieve globally, right? And the challenge here is that biodiversity is a complex issue. So it's not going to be a CO2 emission metric and we need to reduce that by 2050. It's going to be much more complex than that. So they are talking about like a range of goals that they want to set up, like reversing nature loss by 2030 and having like 30% of conservation on different ecosystems. So if we want to achieve that, it's going to require a wider range of tools for investors as well on how we start measuring the overall, ambitious level of our investee companies to achieve that target. So I think that perfection is actually the enemy of the good. So we should not aim to achieve like a golden standard on how we measure biodiversity. We need to be a bit more creative and flexible around that. And I think the only way to achieve that is if we have that sort of agreement from COP15 and we work together with the companies and with the governments to really find out solutions.
And break it down into smaller goals maybe and move on from there. Yeah, Kelvin, Anderson?
The political factor is a concern. I think we could have better institutions, better environmental laws, of course, better enforcement and so on. But it's worth focusing on the root cause of biodiversity loss, and that's the food system and land use change. And so for me, that's the worrying part. We still have an incessant rise in the demand for global commodities, whether that's palm oil, rubber, timber here in Asia, or soybeans and cattle in the Amazon, for example. So, how do we manage that when global populations are rising, diets are changing? And that's a discussion worth half an hour alone.
Yeah.
It's we got to change, I think, diets, eat less meat, which is not regeneratively grazed. We need to, I guess, put price on the negative externalities that industrial agriculture generates, and so on. So many of these angles we have to work towards.
Well, that's a very helpful point because I think that's where it touches on the consumers who we haven't really talked about as much in this conversation.
Yeah, consumer awareness is very important.
It's something where they can see and feel, the impact on biodiversity. Interesting.
Michelle, my biggest fear is short-termism. That people start thinking quarterly, even annually. We see it happening as we speak. I think I saw an article that BlackRock is taking a little bit of a step back on ESG because of the Ukraine-Russia war. So sustainability and biodiversity takes time. It takes commitment, and it takes years and years to implement. And if companies are held in a capital structure that rewards quarterly earnings only, then it's very, very difficult to invest in biodiversity. So my biggest fear is how can we move companies from thinking from quarter to quarter to year and 3 years and 5 year plans. And some of it is regulations, some of it is voluntary market, but a big part of it is consumers. Again, the younger generation, or whoever that's consuming, need to make the right decision. And I hope the regulators can point us the right way. Which are the products that are really sustainable, and which are the products that are trying to be sustainable.
Yeah, that quarterly reporting, we've heard a lot of companies complain about across subjects, but I can see how, particularly for this one, you get in a trap there. I want to end, we just have a minute or so to go. I want to end on a high note. So instead of now your biggest fear, can you tell us what reasons for hope do you have? And maybe, if you can point to a specific project or a specific geography that kind of gives you a little bit more of a lighthearted outlook on how things will go on this issue.
Yeah, for me, I think it's really what I talked about before, that now we have a financially sustainable way of doing conservation, of protecting nature, right? So it's the carbon markets, it's regenerative models, right? And also, I think we are getting to a stage, where at the precipice of change here, where society increasingly recognizes that net zero is no longer enough. We have to move towards nature positive. And so that's a very good direction we're heading in.
I like that, nature positive. Laura?
I was going to mention the same points, but maybe on top of that, what I think is very positive is to see the overall raise on awareness from the investor community on this topic. Especially in the last couple of years, we've seen initiatives like the Finance for Biodiversity Pledge, where more than 100 financial institutions committed to measure the biodiversity footprint of their portfolios. And also now the launch of the Nature Action 100. That's going to be an investor collaborative group really engaging with those companies, 100 companies that have the most negative impact on biodiversity loss. So I think these examples are great to showcase how we can also play a role in sort of trying to find solutions and really nudge our investee companies to implement more sustainable business practices and also, for example, embrace regenerative agriculture as a tool for, those companies in the agricultural sector to mitigate a bit that negative impact on nature.
Great.
Michelle, can I just say
Finish strong.
something totally off? What I'm excited about and optimistic is this high fossil fuel price would accelerate transition to renewable energy. Right? I mean, oil price is high, coal price is high. I know Indonesia exports coal as well. And everyone's saying, wow, this whole this high fossil fuel price is going to allow CapEx to invest in. Actually, I believe with high fossil fuel price, it's accelerating the transition to renewable energy. Case in point for our company. We started with 1 megawatt of solar panels. 1 megawatt is about 1 hectare of land in actually one of our rooftops in our factory to reduce our coal consumption. The payback in 2019 when we installed it was 11 years. Right now, at the current fossil fuel price, the payback is 6 years. And we expanded it to 25 megawatt. Just overnight, we make a decision. My point being is, being sustainable makes good business. Another case to invest in biodiversity. Investing in biodiversity generates carbon credits, makes good business. So I think if I could take away something is, there are a lot of things that we can do that is sustainable, that is good for biodiversity, and make good money out of it. So I think with that intention in mind, I think we can make the next few years ahead much better.
Well, this is great. It's good to end on a high note. I think we got a lot of stark statistics, and that's ringing in my head, Kelvin, what you said about 2% of climate finance being nature-based. So a lot of room for improvement, but thank you all for your fantastic insights, and we hope this conversation continues. Thank you all.
Thank you, Michelle.
Thank you.